Yes, and that's two downgrades on two hot Indian IT companies by Goldman Sachs, and that's Mindtree and Mphasis. And both the companies have been outperforming the Nifty IT index. If you see, since 1st of July, the Nifty IT index is up 24%, versus Mindtree in the similar period is up 69%, and Infosys is up 47%. So a clear outperformance by both of these companies. And now on the back of valuations, Goldman Sachs has downgraded both of these stocks as they believe that both of these companies are not trading, trading above its fundamental values, and that's why they have downgraded Mindtree to sell from a buy rating earlier, and the revised target price on this one they have targeted as 3,669 rupees per share. That implies 20% potential downside from the current market price. And similarly, they believe that Mphasis is also trading above its fundamental values, and they have downgraded this one to neutral rating now from a buy rating earlier, and the revised target price for this one is at 3,014 rupees per share. That's also close to 10% potential downside from the target current market price of Mphasis. For the overall IT sector, they believe that there is a strong technology upcycle ahead, but somewhat this appears to be largely priced into the stock price of most of these IT companies, as the sector is pricing in the strong demand tailwinds. They believe that the valuations for the sector is already pricing in the next 3 to 5 years of growth, particularly in case of the mid-size IT companies, and they expect the EBIT margins to be broadly contract over the next 2 years, led by tighter labor market and higher travel expenses with increasing reopening trend. So all of these negatives could impact all of these companies in the near term itself. And having said that, they expect the margins to remain range bound over FY23 and 26, helped by the operating leverage, that's for sure. On the IT companies, they do also add that they believe that any macro headwind, that could be anything related to Fed rate tapering, increase in the corporate taxes in the US companies, and also any monetary policy tightening in India or globally across, could impact the earnings and the valuations more negatively for most of these mid-size IT companies versus any of their larger peers. And having said that, they reiterate their buy rating on Infosys for a target price of 2,117 rupees per share. That's close to 20% upside from the current market price. And also on the leader TCS, they are targeting 4,578 rupees per share. That's almost 20% upside from the current market price of TCS. So Goldman Sachs in this report is clearly not that positive on mid-size IT companies, owing to the various factors in the medium to near term that could impact the valuations of all of these mid-size IT companies. And on the other hand, they still hold quite an optimistic outlook on the larger players of the Indian IT space.